and it was already executed. I'm placing an order to buy at 117.057, and position opened at 117.057 euro USD. Yeah, so we purchased euro at 117.057.
Welcome back to the European Open. We're 30 minutes into the trading day this morning. The Stock 600, the benchmark index, is down nearly 0.5% this morning. European equity futures are pointing to a higher start in Europe, but that didn't materialize at the open. And if you look at the sectors, only 3 sectors are actually in the green this morning, but just barely. And the sector that's really the laggard this morning is travel and leisure, down more than 3%. This comes, as we heard from Ryanair. They're very worried about a second virus resurgence, as well as they booked $185 million loss. TUI is also under immense pressure. This is the UK government over the weekend says if you're traveling back from Spain, you have to self-isolate. And adding to even more pressure this morning around the coronavirus is Hong Kong. Stricter measures. If you're going to be in public in Hong Kong, it can only be you and one other person. So becoming very much more, very strict in some parts of the world as they deal with the resurgence of COVID-19 cases. Now let's get the Bloomberg First Word News with Laura Wright. Laura?
Thanks, Anne-Marie. Spain is criticising the UK's decision to quarantine returning holidaymakers amid a surge in virus cases. Foreign Minister Arantxa González Laya says Spain is a safe country and that it's working hard to keep infections under control. Airlines British Airways and EasyJet also hit out at the decision. They say it adds to even more uncertainty for British travellers and their industry. China is slamming what it calls forced entry into its Houston consulate by US personnel. That's after officials ordered the office to shut. China says the move breaks diplomatic conventions and is vowing to respond as necessary. The US has now lowered its flag over the American consulate in the Chinese city of Chengdu. It was ordered to leave in retaliation for the closure of the Houston mission. And billionaire investor Ray Dalio says the conflict between the US and China could expand. He told Fox News Washington and Beijing could face what he calls a capital war. He warns there may be more rules about investing in China or possibly even withholding bond payments. Dalio says policies like that could harm the dollar. The finance industry's gender gap looks to be widening. That's as the number of female candidates for top jobs has taken a dip. According to a survey by law firm Pinsent Masons this year, women made up around 1/5 of applications to senior managerial roles. Last year, the number was around 1/4. It highlights the sluggish progress on efforts to make the industry more diverse. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anne-Marie Youssef.
Laura Wright in London, thank you very much for that. Europe's biggest tech company, SAP, has raised its free cash flow for 2022 about 4 billion euros. And that's after it announced plans to spin off its customer survey software Until Water unit through a U.S. public offering. Speaking to Bloomberg, the CEO, Christian Klein, explained why SAP is selling a stake less than 2 years after buying the firm.
Qualtrics was, for sure, one of the best acquisitions SAP ever did. I mean, they performed in the last 90 months above and beyond all the expectations we have set at the point of the acquisition. Now, 3 months back, when I became the sole CEO of SAP, Ryan Smith and I discussed a few options about how to move Qualtrics to the next level. And the partial IPO, and we are both fully convinced, is actually a win-win situation for both SAP and Qualtrics. Why? First, it will allow Qualtrics to focus on the non-SAP customer base in a high growth market. And second, despite the IPO, of course, SAP will remain fully committed to experience management, and we will develop further use cases for our customers, and of course also continue with the joint go-to-market. So SAP is fully committed and will be, of course, also on the long run, highly committed to Qualtrics, and also will remain a majority shareholder of Qualtrics going forward.
Right. So with that structure, do you expect to be able to compete with Salesforce still, which was the rationale initially of acquiring Qualtrics?
Yeah, absolutely. I mean, we kicked off already in the last 19 months great use cases for our customers. So we launched the human experience management, which helped both to accelerate the sales of Qualtrics, but also, of course, of our core application success factors. We did the same for commerce. And in our product strategy, there are actually plans to really expand experience management across our solution portfolio. And our employees are very excited about that because they see the benefits for our customers. And this is something what won't change with the IPO. We only allow now Qualtrics with more autonomy to also go after the market with non-SAP customers, as this is a high growth segment.
Christian, is there a risk, though, that investors start to see some flip-flopping or lack of clarity around strategy, not just because of this change with Qualtrics in as much as 2 years, but also the fact that you've gone from a co-CEO to a CEO structure?
Absolutely not. Yeah. So first of all, when you look back into our last quarter, we are very, very proud of this result because it shows the resiliency of SAP during this crisis. We closed over 17,000 license transactions. We delivered go-lives above 18,000. So this shows how resilient SAP is in this crisis. Our current cloud revenue backlog is up 21% as customers are realizing to also increase their resiliency. They need SAP solutions like for an intelligent supply chain, like for commerce, like for Qualtrics. So SAP is more relevant than ever in this crisis. And finally, you mentioned it, our free cash flow is up 59%. So we are also able to, on the one hand, tightly manage our bottom line, but at the same time also invest into our future growth drivers like the industry cloud. So we are doing this now out of a position of strength.
That was Christian Klein, the CEO of SAP, speaking to Bloomberg a little earlier this morning. For more, Sarah Syed, Bloomberg's technology reporter for Europe, joins us on the phone. Sarah, was this a surprise move by SAP? They've only just bought Qualtrics 2 years ago.
Absolutely. It's, as you said, it's been a 2-year process, or 2 years after buying the firm, to help compete with the likes of Salesforce. It's definitely come as a surprise, and the decision really marks a quick turnaround from the $8 billion purchase that it made in November 2018. And at the time of the acquisition, it received a real lukewarm reception from investors who weren't particularly happy with the price tag, but it's also a legacy acquisition of the former CEO, Bill McDermott.
I look at the last 12 months return on their stock, and it's about 24%. Analysts don't see much return potential going forward. What's the likely reaction going to be as more and more investors get their head around the announcements?
Jefferies today in a note called it an unexpected plot twist. So it's certainly something that came, as a surprise to the market and to the analysts that cover the company. I think one of the complaints that SAP has had lobbed at it over the years is maybe not being able to integrate its acquisitions properly. And this is what some of the analysts are saying, that, the IPO of Qualtrics raises questions about the achieved level of integration of SAP's products. So the other thing that, analysts have been saying is that if Qualtrics is to fully capture the opportunity in the experience management market, it would likely need to enter into partnerships with other software vendors, some of which may compete with SAP.
What about the timing of all of this and the valuation? What are we looking at?
So So SAP has come out and said that they expect this to be between a 10 and $16 billion dollar listing, which is obviously a massive uptick on what they spent for the business 2 years ago. So from that perspective, if the valuation works out, depending on market conditions, it would be a real win for them. In terms of timing, I think it's really unsure as they've just started the process, and gathering IPO documents can be quite a laborious task, and depending on market conditions. But I don't think it's something that we're going to see in the immediate future.
To what extent does the IPO of Qualtrics have anything to do with the departure of the company's co-CEO, Jennifer Morgan, after only 6 months at the term? I mean, that's a red flag.
There's been quite a few kind of, I guess, shocking changes at the company. It was less than a year ago, October last year, when Bill McDermott decided to stand down, that Jennifer Morgan and Christian Klein were appointed as co-CEOs of the business, which was a real landmark achievement for Germany and the DAX, as that marked the first female CEO of a DAX company ever. She also then now won the prize of being the shortest lived CEO or female CEO in DAX history as well. And I mean, Klein has mentioned a number of times in the calls today that when he became a sole CEO 3 months ago, that's when he started having these conversations with the CEO of Qualtrics, Ryan Smith. But so, it seems on the surface that the conversations only happened recently. But, when Jennifer Morgan was appointed co-CEO, she took on the Qualtrics as her baby. So, pure speculations, but that could have been a thorn in the side.
Sarah Syed, thank you so much for your analysis and intel on that. She's our tech reporter for Europe. Coming up, crossing the melting Arctic this year, the Arctic is on track to post the lowest ice coverage on record. Stay with us. This is Bloomberg. Welcome back to the European Open. We're 43 minutes into the trading day this morning. The FTSE and the CAC are under pressure, both down more than 0.4%. The DAX, though, relatively flat. Let's get the Bloomberg Business Flash. Here's Laura Wright. Laura?
Second wave of coronavirus. It's concerned a series of local lockdowns could hold back the recovery until next year. The airline posted a loss for the 3 quarters to June and says it'll lose money through the rest of the summer. Ryanair says the virus could continue to hit demand for months to come. Credit Suisse is set for a potential windfall as Ant Group goes public. Sources have told Bloomberg the Swiss bank invested nearly $100 million during the firm's last funding round. According to analysis from Bernstein, it could see a 40% increase in value. The bank does not plan on selling the stake. No official comment from Credit Suisse. Rolls-Royce is exploring the emergency sale of a unit that makes parts for Eurofighter Typhoon jets. That's according to The Telegraph. It comes as the engine maker rushes to raise billions of pounds to see it through the pandemic. The newspaper reports Rolls-Royce is in early talks to sell the unit to a private equity company. That's your Bloomberg Business Flash. Anne-Marie Youssef.
Laura Wright in London. Thank you for that. This year, the Arctic is on track to post the lowest ice coverage on record. That development has concerned scientists, of course, but for companies producing and shipping oil, gas, and metals, this is opening a new and shorter sea route from the northern Europe area to China. Joining us now for more on this from Madrid is Laura Mian. Laura, I mean, you're a reporter, of course, for Bloomberg Green, and you've looked at how 2 different ships have, set very different records this summer. What do these ships tell us about the current situation in the Arctic?
That's right. So we have told this story through 2 different ships. One of them is a gas tanker, a liquefied natural gas tanker called the Christophe de Margerie. And this ship set sail from northern Russia to China this year in mid-May. That was a record. It was the earliest any cargo ship had sailed this route from northern Russia to China through the north. And for a part of that journey, it didn't even need an icebreaker because the ice was so thin, it could make the journey on its own. So this is obviously a sign of how sea conditions are changing very rapidly in the Arctic, how the ice is melting. The other ship that we looked at is the Polarstern. That's the largest polar expedition in history. It's 100 scientists on the Arctic for 12 months. In a way, looking to explain how this other ship, the gas tanker, was able to sail that route so early in the year. They're looking at all sorts of phenomenon of how climate change is impacting the Arctic right now.
Laura, you've done so much research about this. Could the ice in the Arctic completely disappear? And if that was to happen, what does that mean for shipments of raw materials?
Yes, so the Arctic could disappear during the summer. So an ice-free Arctic during the summer months is possible, and scientific models estimate it will happen. They differ on the times. Most of them estimate it will happen sometime in the middle of this century. Some of them say a bit later, after the end of the century, some of them a bit earlier. But yes, scientific models estimate that an ice-free Arctic during the summer could happen. At this point in time, as you were saying before, the ice in the Arctic is 26% smaller, the area that's frozen, than the historic average, and we're on track for the lowest ice cover on record this year. What this means for oil, gas, and metal shipments from the Arctic to the rest of the world is that obviously new routes are opening up. The shipping routes are shorter, about a third shorter, and potentially much cheaper for the companies shipping these materials to the rest of the world.
I mean, we know that the melting of ice in the Arctic is affecting climate in the rest of the world. I mean, what does the data specifically point to here? What's the evidence?
That's right. So for these companies that we were talking about before, it's a short win because obviously the melting of the Arctic is affecting climate in the rest of the world. So one scientist was telling me that the Arctic and the Antarctica, the 2 poles, are effectively the freezers of the world. Because their surface is white, they help reflect the sunlight the sunlight out to the atmosphere again. So they're effectively cooling the world. So as these polar caps shrink, this white surface is shrinking as well and being replaced by ocean, which is dark and absorbs the sunlight. So that effectively heats the world. Then at the same time, obviously, that generates atmospheric currents, and that these can be traced to weather events in places like New York, like Germany, in the rest of the world. And obviously, as the ice melts, it becomes water. So sea level in the rest of the world is rising as well, and that is forecast to cause the displacement of hundreds and thousands of people across the world if it continues at the current pace.
Thanks to Laura Mian, our Bloomberg Green reporter in Madrid. If you want to get more on her story, it's going online at 9 a.m., and I suggest you check it out. Up next, the DAX may beat the S&P 500 this year. That's the macro view from our MLive editor, Heather Burke. We'll discuss that next. And what's the key?
Hey, Andy, don't quite understand your question. Can you rephrase it? What do you mean? What it has to do? We're trading Bitcoin, right? If you got another question, or just rephrase it, what do you mean?
Welcome back to the European Open. We're about 52 minutes into the trading day. This is the state of play. Initially, it looked like we were going to be on a firmer footing in the equity session, but now we've given back quite a bit of that. We are down about 0.5% on the FTSE 100, and the DAX still holding up in terms of slight upside, but it all got a bit of a wobble after Hong Kong tightened the public gathering limit to 2. And again, one of the prime examples of parts of the world that are going the opposite direction. So instead of reopening, tighter restrictions, trying to mitigate this potential flare-up of a second wave. Anne-Marie.
Yeah, and Yusuf, here in Europe, we've seen the UK now have a quarantine measure imposed on those travelers coming back from Spain. And that's really hit the travel and leisure and the airline sector this morning. You could see there TUI down more than 13%. HSBC down more than 2.5%, nearly down 2.5%. But on points-wise, it's the biggest loser this morning in the European sector. Part of this could be, Yusuf, as you say, those Hong Kong lines on more restrictive measures in public. But also, over the weekend, they have responded to the latest allegations of a Huawei legal team denying framing Huawei. And then finally, SAP is up this morning, up more than 3%, raises their 2020 free cash flow forecast. And on top of that, they are also spinning off part of their company, which they only just bought 2 years ago. And joining us now to discuss what's going on in Germany specifically is MLive editor Heather Burke. Heather, I want to ask you about this piece you wrote this morning about the DAX. You're saying it's going to be successful through the year, potentially beating the S&P 500. Does all of this come down to the measures Germany took in terms of the quarantining measures and how they were going to contain the coronavirus?
Yeah, I mean, good morning. The Germany's volte-face on stimulus is a huge reason that German stocks and even the euro have can outperform U.S. assets this year. 6 months ago, the idea of a budget deficit was virtually unthinkable. Since then, Chancellor Angela Merkel has won plaudits for decisively handling the crisis. Not only did Germany launch domestic fiscal stimulus via deficit spending, but she was instrumental in passage of a European Union relief package. In the U.S., the outlook for stimulus is shakier this week, with the $600 a week federal boost to unemployment insurance set to expire at the end of the month.
We've got the Bloomberg Dollar Index falling to a level that we haven't seen since January of 2019, and it's reverberating across assets. How much further will the U.S. dollar fall? That is the question that the MLive team is asking.
I think there's more room for downside in the dollar. It's heading for its worst month since the beginning of 2018, and money managers are positioning for a summer of prolonged weakness. A lot of it's going to have to depend on how the U.S.-China disputes play out, and is the U.S. going to be able to contain the pandemic? There's also the uncertainty of the presidential election and growing expectations that the Fed's going to have to slash rates further. So this week, that could be pivotal for the dollar. A lot of it has to come off with, will the dollar ultimately its role as a haven currency kick in? I mean, it surged as stocks tanked in March. Right now, the latest uncertainties are favoring currencies such as the euro. If there's another full-blown crisis, the dollar could reassert itself as the preeminent haven.
Absolutely. Thank you very much for that. That is Heather Burke from the MLive team. We are keeping a very close eye on what is happening in global markets and counting down to the Fed as well later on in the week. The risk aversion stemming from uncertainty around how countries are going to deal with the coronavirus. We just saw this in an evident case in Hong Kong, specifically tighter restrictions, closer and lower yields. Anne-Marie.
Yeah, it's going to be a huge week, Yusuf, in terms of earnings. We're waiting for that stimulus package out of the United States, GDP from the United States, as well as we're going to hear from Jay Powell. And as you say, more coronavirus measures are coming out of Hong Kong as well as the UK, and that is putting some pressure on the markets this morning. This is Bloomberg.
I'm placing an order to buy Japanese yen. So the order placed to buy Japanese yen at 105.575. So the order placed 105.575. New position opened on Japanese yen at 105.575. That's a long position.
U.S.-China tensions simmer and consulate closures and arrests over spying allegations. Ray Dalio warns a capital war between Beijing and Washington could hit the dollar. The second wave emerges. Spain scrambles to stay ahead of new virus outbreaks as the UK imposes a quarantine on returning travelers. And gold surges to a record $2,000 an ounce is in sight as concerns over the global economy boost demand for havens. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the markets do tell us a good story of what's going on exactly in terms of investor mood and investor fear. We also have the IFO Institute coming out with some projections. Those should be out very shortly. Overall, the focus is on gold. Gold. Ever higher, piercing a record as the dollar is sinking. European stocks open lower in general, but the focus is also on treasuries edging up. Now, on that IFO figure, let me see if we have it and if it's out already, but it gives us a good indication on the back of some PMI figures that were better than expected last week. IFO July German Business Confidence Index at 90.5 instead of the estimated 89.3, so a bit better than expected. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Spain is criticising the UK's decision to quarantine returning holidaymakers amid a surge in virus cases. Foreign Minister Aranches González Laya says Spain is a safe country and that it's working hard to keep infections under control. Airlines British Airways and EasyJet also hit out at the decision. They say it adds to even more uncertainty for British travellers and their industry. Europe's economy is set to outpace the US thanks to very different responses to the coronavirus crisis. Surging cases in America are putting the brakes on its rebound, but in Europe, many former hotspots have managed to reopen without a similar spike in infections. This relative success may encourage people to spend more and businesses to invest. The U.S. economy is still poised for a third-quarter rebound. That's according to White House economic advisor Larry Kudlow speaking to CNN. He says the impact from hotspots in the Sun Belt is likely to be limited, and he still sees a V-shaped recovery. Kudlow says he thinks the growth rate in the third and fourth quarters is going to be around 20%. And the finance industry gender gap looks to be widening. That's as the number of female candidates for top jobs has taken a dip. According to a survey by the law firm Pensett Masons, this year, women made up around a fifth of applications to senior manager roles. Last year, the number was around a quarter. It highlights sluggish progress on efforts to make the industry even more diverse. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, U.S.-China diplomatic tensions continue to simmer. Beijing has criticized the forced entry to its Houston consulate by U.S. personnel. According to local media, federal agents and local authorities broke into the consulate building late Friday. This morning, the U.S. says it has closed its consulate in Chengdu. Now, the tit-for-tat closings mark a significant escalation in tensions, and Bridgewater founder Ray Dalio says the conflict could hit the dollar if it escalates into a capital war.
If you say, by law, don't invest in China, or even possibly withholding the payment of bonds that the United States owes payment on in China. These things are possibilities, and they have big implications, such as for the value of the dollar.
Well, joining us this morning, Peter Dixon, a global equities economist at Commerzbank. Peter, good morning to you. What's your take on this U.S.-China spat? Is it a real escalation, or after the closing of various consulates, is it going to appease itself?
Good morning. Well, it all sounds very like the old Soviet-U.S. relations, bit of tit-for-tat, embassy closures, and things moved on. I think, however, this time things are a little bit more scary in the sense that we have, a president who is trying to appear very hawkish ahead of a presidential election, and it's entirely possible that things could get a little hotter in the course of the next few months, just ahead of the election, as Trump tries to send a major signal. So I think investors are right to be cautious about where this could head. I'm hopeful, however, that it's not something which we will necessarily see continuing into 2021.
So is the asset most at risk the dollar, Peter, or could it also be equities?
Well, I think the dollar clearly is in the firing line at the moment. We've seen that it's weakened quite significantly over the course of recent sessions. Equities too. I'm sure there will be some concerns, as there certainly appears at the moment anyway to be a sense that many investors are already favouring Europe over the United States for a whole variety of reasons, economic, corona-related, etc. So certainly I would expect to see that if tensions do ratchet up, you would perhaps start to see the US equity market underperforming.
Peter, where do you see the most value?
In terms of geography, certainly I would say at the moment, you would probably want a bit of exposure to the European markets because, in addition to the fact that the economy seems to be getting back on its feet a little better, the policy environment just seems a little bit more secure. You're also going to get a bit of a pickup from holding equities in which the currency is rising as well. So Europe at the moment seems to be a good place to be, but we know how markets can change tack very quickly. Certainly, I think you would want to continue to look at this on a weekly, maybe a monthly basis to ensure that the factors which drove you into Europe in the first place are still considering to hold.
Peter, when you look at the kind of equities that you actually like, I don't know whether expensive is best because they feel safer or there's a bubble brewing in certain equities or certainly frothiness.
Yeah, it's a good question, and it's a tricky one I think many of us are trying to wrestle with. I think during times of difficulty, such as we've experienced over recent months, I think the tendency is to go for the blue chip stocks, the safe havens, despite the fact that valuations look a little bit excessive. Having said that, I think that valuations these days are increasingly meaningless. We're operating in a world of exceptionally low interest rates, and our traditional metrics probably no longer hold. So I think what we're a bit concerned about is the extent to which some of these traditional safe haven stocks are potentially going to be subject to major disruptors over the course of the coming years. That doesn't mean to say you shouldn't continue to hold them in the near term, but I think the safe haven blue chips will probably lose their luster as time goes on. And of course, as we head toward a key reporting season for the tech sector, I think we're all looking at the tech stocks and thinking they look a little bit toppy at the moment. Do we want to be there? Perhaps not, but we don't really have anywhere else to go.
Peter, thank you so much. Peter Dixon there from Commerzbank stays with us. Now, coming up, the future of Europe's biggest economy. We'll talk Germany's economic recovery from the pandemic with the IFO Institute president. That's shortly, and this is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Europe's biggest tech company, SAP, is selling a stake in its Qualtrics unit through a US IPO. It comes less than 2 years after buying the firm for $8 billion to help compete with Salesforce. Chief Executive Christian Klein says the spin-off is win-win.
It will allow Qualtrics to focus on the non-SAP customer base in a high-growth market. And second, despite the IPO, of course, SAP will remain fully committed to experience management, and we will develop further use cases for our customers, and of course also continue with the joint go-to-market.
And Ryanair's worst fear, a second wave of coronavirus, is concerned a series of local lockdowns could hold back the recovery until next year. The airline posted a loss for the 3 quarters to June and says it will lose money through the rest of the summer. Ryanair says the virus could continue to hit demand for months to come. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, health officials across the globe are grappling with second waves of the coronavirus pandemic. China has reported the most domestic cases since mid-March, amid flare-ups in the west and northeast. Spain, India, and Australia are among other countries facing rising outbreaks. Now, we'll get the latest with a virus expert later this hour, but first, let's discuss the economic impact. Still with us, Peter Dixon from Commerzbank. Peter, how difficult is it to model the type of recovery we'll get, given we're not sure whether this is a second wave or just a continuation of the first wave getting worse?
Yeah, it's impossible, really, isn't it? I think the problem is that we don't really know how badly, or we fully know anyway, how badly the first wave impacted upon the economy in the first place. We're starting to get, I think, more indications of that now. But the real issue is going to be, even if there wasn't a second spike, We don't know to what extent the economies will recover because of the fact that social changes the business model for many particular service sector companies. And if there is a second spike, I mean, the OECD was, I think, one of the institutions which did some work on this a few months ago. I mean, basically, it says that, however bad the first wave has been in terms of the economic impact, the second impact will be, really, really awful. So, we're all starting about in the dark trying to figure out what's going on. But at the moment, it certainly is weighing on investor sentiment. It's weighing on business sentiment, which I think is perhaps more important. And certainly, I think it will act to prevent significant upward revisions to economic forecasts sometime to come.
If you look at the wave of infections, how difficult is it, Peter? I mean, do you make a geographical difference depending on how they're able to deal with the pandemic and whether they're going to be imposed maybe regional lockdowns, or is it just too difficult to predict?
Well, I mean, as I said, it is too difficult, but I guess we have to make some kind of assumption. And I think the view would be that, going forward, we wouldn't see the kind of wholesale lockdowns that we saw earlier this year. I mean, I rather suspect that we will see a series of rolling regional lockdowns. Now, whether that's, parts of the country or, one country vis-a-vis another, I think remains to be seen. But certainly the experience in the UK and I guess also in Spain is that certain cities tend to get locked down. And that, I think, will probably be the pattern of the future going forward because, again, policymakers do not want to damage the economy any more than they can manage, they can afford. And as a consequence, I rather suspect that the economic impact of regional lockdowns will be relatively limited, but I think the effect on confidence will be significantly greater, and of course we'll see that reflected in markets, I guess, going forward.
Peter, what do you do with tech stocks right now?
Yeah, good one. I mean, I think you've got to hold them right now, but the fact is that the markets are priced for perfection. And I was looking at Microsoft numbers recently. I mean, they had a pretty good second quarter, and still the stock sold off after the earnings announcement. So we've got a lot of earnings coming out this week, and I rather suspect that the markets are priced for all the good news, and they're looking for more. So we may see tech stocks take a little bit of a dip later this week, but I still think you have to hold them for the simple reason that I think they will emerge as one of the winners from the crisis. Even if perhaps some of the expectations at the moment are unrealistic.
If you were to describe the earnings season so far, I think we've had 25% of companies, and a lot of the earnings that we saw last week were definitely focused on cost cuts. This week is going to be extremely busy with earnings, but how do you describe this earnings season?
Surprising in a sense, because obviously something like 80% of companies on both sides of the Atlantic have beaten expectations. And it surprises me, I guess, that markets have fallen for the old trick of companies trying to undersell expectations. Maybe this time around, companies genuinely believe that things were going to be bad, and they haven't been quite as bad as anticipated. Who knows? But it's been a decent earnings season. But I think if you look at the bold figures, we've seen a significant drop in earnings. Markets continue to expect that over the course of the next sort of 12 months or thereabouts, we will see a significant rebound. I think those expectations might prove to be misplaced, particularly, as you said, because a large chunk of the earnings going forward is going to be driven by cost cuts. Because if you cut costs, you cut incomes, and you cut the top line growth. So the outlook going forward is going to be, I think, very dependent upon the kind of earnings guidance that we see over the course of the coming days and weeks.
Thank you so much, Peter Dixon, there, global equities economist at Commerzbank. Now, coming up, the future of Europe's biggest economy. We'll speak to the IFO Institute president, Clement Fuest. And that's coming up next after the German business expectations actually rose to the highest level since 2018. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get the latest on Europe's biggest economy, and businesses in Germany are growing increasingly optimistic that government support at home, together with euro-era stimulus, will drive an economic recovery later this year. Expectations that companies surveyed by the country's IFO Institute improved to 97 in July from a revised 91.6 in June. Now joining us from Munich is Clemens Fuest. He's president of the IFO Institute. As always, thank you so much for giving us a little bit of your time. Mr. Fuest, overall, does the recent economic data in Germany and the wider euro area make you confident that we'll see a better slowdown, a less severe slowdown than expected?
This is certainly positive data coming in here, but we shouldn't forget that this data has two components. As you said, one is expectations and the other is the current situation. So the current situation, companies are telling us, is still very bad, but the expectation is that this is increasing. Now, if companies say this at a very low level, in a very bad situation, if they say it's increasing, that's different from being in a normal situation and saying it's coming better. So in a way, it's unsurprising that a large number of companies saying this is getting better because we are starting from such a low level. Still, this is a positive sign, so we can expect to be on the way towards a recovery.
Do you expect the German government to provide any additional stimulus in the autumn?
This will depend on how the economy develops until the autumn. I think in the current situation, they would tend not to do so, but we don't know what's happening in the autumn. There are concerns that we may have more outbreaks, that more may be happening. So one concern was that people wouldn't go back to the shops and spend. And what we now see is that, yes, it seems that people are spending, consumers are spending. So the concern that there will be sluggish consumer demand, this concern is going away at the moment. But we don't know what's happening in the autumn. Uncertainty is still very high.
What are you expecting the ECB to do extra? I mean, is there anything that they could do that would target the right things?
I don't expect them to come up with more stimulus at the moment. I think the ECB is also seeing that the economy is recovering. The difficulties we still have, I suppose, are not easily addressed. One of the challenges, for instance, is the development in the US, so there's little the ECB can do about that. Another issue is that, for instance, in the car industry, the recovery is very slow. But I don't think the ECB can address those issues very easily. And there has been a lot of stimulus. I think what the ECB is doing now is see the impact, certainly be ready to act if things get worse in the autumn.
What are companies telling you about their concern about a second wave hitting Germany? And what does that mean for their CapEx and hiring plans?
Companies do see the situation as a fragile one, as being fraught with uncertainty. Still, they are planning to reduce the workforce further at this moment. So there's no turnaround yet at the labor market. But in terms of the general business situation, they are seeing order flows are starting to come again. So there is a certain stabilization, but we are not beyond the crisis in the sense that that companies aren't hiring yet. They are still waiting.
Will the sort of spat or flaring up of tensions between the US and China actually dent the German animal spirit? Are our chief executives going to be even more careful because of that?
They are certainly watching this very carefully. Now, US-China tensions are not really new, so we have seen this conflict for some time. There were hopes, certainly, that this might go away a little bit in the crisis, which it doesn't. So this is an ongoing concern. At the same time, the economy in China is recovering, and so is Chinese demand for German goods. So China is one of the positive factors at the moment. Certainly, these tensions are a problem, but I don't think they are considered as a major or in any way a new obstacle for German companies.
Mr. Clemens Fuest, as always, thank you so much for your time, the president there of the IFO Institute. Now, coming up, Europe's biggest discount airline books a €185 million loss In the second quarter, we'll bring you our interview with the Ryanair Chief Financial Officer. He's Neil Sorohan. He's coming up next, and this is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. China is slamming what it calls forced entry into its Houston.
I'm placing a stop on profit for euro at 107.077. Okay? Stop on profit place at 107.077. It will give us £200 profit. All right?
The US and China could expand. He told Fox News Washington and Beijing could face what he calls a capital war. He warns there may be rules about not investing in China or possibly even withholding bond payments. Dalio says policies like that could harm the dollar. And Hong Kong is imposing stricter social distancing measures. The city is limiting the number of people in public gatherings to 2. That's down from 4. It's also banning all dine-in services at restaurants. The move comes amid a surge in local infections over these past 2 weeks. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine. Francine.
Leanne, thank you so much. Now, Ryanair's CFO says he doesn't expect the companies to start turning a profit until 2021. That's as Europe's biggest discount carrier posts a loss of 185 million euros in the 3 months to June. Well, Neil Surahan spoke to Ryanair HH a little earlier.
We're planning this year to carry about 60 million customers in our business, which is about a 60% reduction on what we carried last year, where we had 149 million. And as you rightly said, we had a very difficult quarter where we made a loss of 185 million. We would be hopeful that the losses into Q2 are somewhat lower than we saw in Q1.
Yeah, so just talk me through as to what impact that could actually have on the numbers. I know it's difficult to predict, but if those second wave fears materialize to the extent that we start to see more quarantines imposed to other countries other than Spain, does that mean potentially several quarters of losses, Neil?
Well, I think this year you're not going to, and we're not guiding for the full year, but you're not going to see profits in the current financial year. I think you're going to have to look into next year before you start to see a recovery on that front, and that's why the likes of cash preservation is hugely important. We ended the quarter with 3.9 billion cash, up from 3.8 billion in the previous quarter, which puts us in a pretty strong position as we go into the winter period. Equally, we've got a lot of competitors who are receiving significant amounts of state aid, which I think is inevitably going to lead to some form of below-cost selling from them, which will lead to reduced fares. So it's very important that
position closed on euro at 107.077. It give us £200 in profit.
Manufacturers and lessors to reduce the cost of aircraft and lease rentals going forward. So we're planning for these kind of scenarios within the business. We would hope, however, that the trace and track strategies put in place by governments will help stave off a second wave and huge lockdowns. We would also be hopeful that we'll see some kind of a vaccine either this year or early into next year, which will give people a lot of confidence in flying.
Well, that was the Ryanair Chief Financial Officer Neil Surahan. Joining us now on the phone with more is our European Airlines reporter, Siddharth Phillips. Sid, thank you so much for joining us. What are the key takeaways from the Ryanair numbers?
Morning, Francine. So the key takeaway numbers from the Ryanair numbers are that essentially they have seen some growth in demand as they restarted in July, and they're seeing about 70% occupancy on 40% of their capacity, and they hope to raise that capacity as much as 70% by September. Now, the uncertainty at the moment is whether or not there'll be a second wave of the virus, as well as whether or not there's going to be further lockdowns as we've seen in the case of Spain over the weekend.
So what does that mean for budget airlines as opposed to the bigger carriers? Do they suffer equally?
Sure. So budget carriers have been trying to make the most of summer, as well as Europe.